Welcome to another S&P 500 analysis. Today is February 17, 2021. This is a midweek edition. Today, the market gave us a warning message, and we will talk about what that warning message means. Stay tuned. Before we take a look at the indexes, let's first take a look at the sentiment and then the internal. Then we'll take a look at the indexes and see what they are telling us and what is that warning message. Looking at this chart, we see the VIX came up to 21.5. So right now it's still sitting inside of this 2030 zone. So we call this basically just a caution zone. And also the put-call ratio is still beneath this 0.75 level, sitting at 0.48. So the risk is still on. And here we are looking at the New York Stock Exchange up-down volume ratio. The up-down volume ratio today was minus 1.2, and also the daily advanced decline, it was minus 519. That means there are 519 more decliner than advancers. Here, looking at the New York Stock Exchange, new high, new low, there were 149 more new highs than new low. And looking at this cumulative advanced decline line, we see this is actually declining a little bit, and also the S&P 500 is also declining a little bit. So they are both in sync with each other, no divergence. And looking at the NASDAQ up-down volume ratio, the up-down volume ratio was also negative minus 1.2. And the advanced decline was a 925 negative. So there were 925 more decliner than advancers. And in the NASDAQ market, there were 217 more new 52-week high than 52-week lows. And the NASDAQ cumulative AD line is also declining. Same with the NASDAQ 100, so there is no divergence. So from the sentiment and also the market internal, there is nothing out of extraordinary. Everything is in sync, and it is not in a panic mode, and it is not on a risk-off mode. Now let's take a look at the indexes, starting off with the S&P 500. As you can see, the S&P 500 bump up against this trend line here on this channel, the upper trend line of the channel, and pulling back. And today, the S&P 500 closed down a little bit over a point, and it did not make a new intraday high. And also, we're basically still waiting for the S&P 500 to come down, possibly fill this little gap here, and maybe even come down here and fill this gap underneath the 3,800 level. And the NASDAQ also pulled back a bit, and also down today for about 74 points. And also, it did not make a new intraday high. Now, yesterday, both the S&P 500 and the NASDAQ 100 made a new intraday all-time high, but did not close with a new all-time high. And for the Russell 2000, the last time it hit the all-time high was back in the middle of last week. So even yesterday, it did not make a new all-time high. And today it continued to pull back and close down as well. And it's down a little bit over 16 points. And also, again, it did not make a new all-time high for the day. And here's the Dow Jones Transportation. The Dow Jones Transportation yesterday actually put in a new all-time high and also closed with a new all-time closing high. But today it pulled back. It still remained to be inside of this channel and above the lower channel trend line. Today, the transportation actually down a little bit over 81 points, and also it did not make a new intraday high. Now, I also want to show the New York Stock Exchange Composite Index before we take a look at the Dow Jones Industrial. You can see that the composite New York Stock Exchange Composite Index yesterday put in a new all-time high and also closed with a new all-time high. But today, it is down and did not put in a new all-time high. The New York Composite is down 20 point, a little bit over 20 point today. Now let's take a look at the Dow Jones Industrial. The Dow Jones Industrial yesterday put in a new all-time high and also closed with a new all-time high along with the New York Stock Exchange Composite and also along with the Dow Jones Industrial. So I tweeted out yesterday after the close that the Dow Jones Industrial made a new confirmed high. Today, we have the Dow Jones Industrial made a new intraday high, all-time intraday high, closed with a new all-time closing high, but here's the warning message that none of the indexes that we have looked at so far made a new all-time high or close at an all-time high today. So this is a unconfirmed new high by the Dow Jones Industrial. And in that sense, that is a big warning sign that the market is stretched and look for a little bit of a rough time in the coming days. Now, there is a caveat, all right? There is a caveat that we have been, using and watching to tell us that there is still a new high for the S&P 500 every time that we see this particular caveat appear, all right? So we're going to take a look at that, but I just want to let you know that with this warning sign, that caveat might not work this time. Okay, just because it worked so many times in the past doesn't mean that it is 100% foolproof, right? And nothing is infallible in this marketplace. So, but I also want to show you that just in case. Remember a while back, I mentioned that when the Dow make a new high, it will be a whisper. You probably hear someone in the evening news mention it briefly, but nothing like when the S&P 500 or the NASDAQ making new record high that you will get all those hoopla. When the market send these kind of subtle message, it doesn't send it with hoopla. It send it quietly. So that's why you need to listen to the market. Now, we're not saying that the market going to crash tomorrow, right? It's just a warning sign that things is going to get rough. So just be prepared. Now, let's go and take a look at that caveat. Some of you probably already guess what that is. So here we are looking at the E-mini S&P 500, and on the right is the on the right is the volume profile chart with the candlestick, and on the left here is the market profile chart, Thinkorswim version. If you want to learn how to do this, I have a video that shows you how to set both of these charts up, the market profile and the volume profile on Thinkorswim platform. And I will put the link in the description below and also up here. So if you want to set up your Thinkorswim platform with these two charts, follow those two tutorials and it will show you exactly how I set these up. All right, so the first thing first, all right, on the volume profile, you see this poor high, pretty flat on this on the volume. All right, we did not get much of a cutoff. But in addition to that, all right, we see on the market profile, there's a poor high from yesterday. So some people might not understand what is poor high. Poor high is each one of these dots is one tick for the E-mini S&P 500. Each tick represents a quarter of a point. And for the spike here, if there's only 2 tick or less, then I categorize that, and a lot of people also categorize it as a poor high. Same thing at the bottom. If there's only 2 tick that form the bottom, then that is what we call a poor low. Now, in the past, when these poor high or poor low form, we see that the poor high will get taken out in the next few days or so. In other words, the price will come up and tag that level. Here's that caveat. We also noticed that on February the 16th, during the Globex trading, the overseas and the overnight market, E-mini S&P 500 printed a all-time high at 3959.25. We know in the past when a all-time high is printed, that is not during the regular trading hour session. The regular trading session hour will go and tag that level. In other words, you have to take out that high and put in a higher high in order to make that all-time high official. Because right now, this all-time high is unofficial because it did not print it during the regular trading hours. It printed overseas or during the Globex hour. So that tells us that we will eventually see the S&P 500 make another new all-time high. I mean, because the E-mini S&P is going to come up and tag that level to make a new high. So that implies the S&P 500 will follow suit and make a new all-time high as well. Now, we said that the market gave us a warning message, to be prepared for some rough time, because today the Dow Jones Industrial is the lone index, made a new closing high and also made a new all-time high. So that could be some rough water here. So how long will this pullback, if we are going to see this correction, how long will it last before we actually see a reversal to see this S&P 500 come up and make a new high and take out this 39.59 on the E-mini S&P 500? Well, we don't know how long, but typically, these highs will get taken out. It could be matters of days, matter of weeks, matters of months, but not matters of years. Some people say, well, the market is rigged, that it will go up over the time frame of a long span. Yes, we know that, but we're not going to tell you to wait a year to get this thing to tag. So if it doesn't get tagged within the next couple months, then that means you are probably facing a lot of pain in the market during that major correction. And when I say major correction, it is basically we're talking about a 20-30% correction, not this 5 to 8% correction. So these are the two things to keep an eye on. Right? We know today we have a unconfirmed high, and that's a warning sign that we should be very careful and lighten up. Then we also have this caveat that there is a untagged Globex all-time high from the E-mini S&P 500 that need to be tagged. Not saying that it will be tagged. It could never be tagged. Be sure to smash that thumbs up and help me promote and share this video. Thank you for watching. Be careful and stay safe.